Welcome back. You're with Money, and this is the property special. What should you be looking at in terms of real estate if you're thinking of investments, if you're thinking of property within your personal finance portfolio? So, Ghulam, let me take your sense on this. I mean, RERA has been one of the most talked about pieces of legislation, and probably we're going to see a lot of states now come out with their versions of the act as well this year. So while it's overall in principle supposed to bring transparency in the system, how do you see it impacting the market? Again, I mean, the whole conversation from a consumer's point of view.
Well, you know, it's on a recent debate, I came across a very lucid statement to explain what RERA is, and mind you, it came from a developer.
Okay.
So a developer, as he said, quote unquote, RERA is about delivering what I have promised. Simple.
That's quite simple.
Right? These are things which will obviously change the markets for good.
RERA is not the only piece of legislation, right? We have seen sort of a very strong intent of the government to really enact and implement the Benami Transactions Prohibition Act as well. Really crack down on black money in any form or Benami properties in any form. Has that started showing some kind of impact in the market already, or would you expect that in this year?
No, this is something which will happen in future, you know, because the Benami Properties Act is essentially to curb the suction of cash economy into land transactions. That's essentially about land. And land is something which is, while it is an ongoing process, but for last 2-3 years, because the finished goods, the consumption of real estate, the housing, etc. has been so subdued that very few investors had enough money to pull out of the system and buy the land for their future projects. So that was something which was in any case on a back burner for a long time.
Okay, that's an interesting thought. Well, on that note, let's actually come down to the most interesting part of the conversation. Which are the markets, if you want to buy something, where should you be really? So Amit, let me get your take. For those, it's a buyer's market. We've been repeatedly hearing that on the show. So for those who are looking at some sort of an investment, which are the markets they can look at? And also break this down in terms of housing, or would it be better to look at some sort of a commercial property? What's your sense?
So it basically depends as to what is the objective of the investment. If the objective is to quickly flip the property in a year or two and take the construction risk, perhaps is not a great decision right now. So it depends upon what type of risk you want to take and what's your objective. If you're in the market for an 8 to 10 year horizon, then I think then it's always a good time, and perhaps if you can get a good deal, it's great. In terms of all the 4 markets, I think North still remains subdued and perhaps will remain subdued for the next 2 to 3 quarters. West is doing fine. In South, Bangalore is okay, and Hyderabad has a lot of resilience, which I would say, because the Telangana issue got resolved a long time back, and the properties prices were muted at that point of time. So Hyderabad shows a lot of resilience. It's still a good market to basically hunt for a deal and try. Towards east in Calcutta, Rajarhat basically has seen a lot of activities with a promise that a lot of ITES companies would come in. So depends upon the state government as to how that pans out. So overall the take is that if you are looking for 8 to 10 year horizon, there are pockets where you should go and bargain. But if you are looking for a quick 2 to 3 year flip, perhaps it's not a great time. Just wait for a quarter and see how it unfolds.
Well, Rajarhat, I can tell you personal experience. I happened to be there just a couple of weeks back, and I was quite taken aback just to see these empty structures. I mean, apartment complexes, after apartment complexes, absolutely unoccupied. So that was quite a sight that kind of stuck with me. But again, the same sort of question to you as well, Ghulam. Let's actually break this down in terms of individuals. So let's first talk about someone who's looking purely at an investment, has, let's say, 40-50 lakhs on the side that he or she is willing to spend. What are the options? And now, given the limitation in terms of the income tax changes, on the second house or the unoccupied house, is that at all a sensible idea, or would you advise a different sort of an investment?
Well, as an investor, if I have to put my money in, I will definitely keep far away from real estate, anywhere, without an exception.
And that's coming from a real estate consultant, so we have to take that very, very seriously.
I am very serious about that, because let's get into short-term, long-term and medium-term kind of a definition. It's very simple for me. If my monies are not growing at 12-13% kind of annual CAGR growth rates, then I would not touch it, and which simply means that in 5 years my property value should double up. Right?
Capital value.
capital value must develop in 5 years. And if it is not happening, and then if you say 10 years, then it has to go four times. You know, so that's exactly where it is. Let's not get into long-term, short-term. Just be very simple on this. If you expect your properties to rise to 2x or 4x in 5 years or 10 years, that's the only time you should. If it is in single digits, which is exactly what it is right now, and going forward next couple of years, we don't see this entering into double digit at all. I'm saying next 3-4 years, it is not going to happen. So if that be the case, and if your inflation rates are where they are, you're actually going negative as far as your money growth is concerned. So extremely cautious approach must be used. I would rather not invest in any of real estate offerings, especially in houses. Well, shops or small offices, once again, it depends on your appetite. What's your ticket size that you can invest. Even shops are a good buy. Small shops, because your entry levels are pretty low, you can. Offices make very interesting situation today, because the demand for offices is just growing by the day, and the supply is not good enough. So if you're getting a good deal of office today, in any case, your return on office are the rental yield is about closer to double digits, about 9-10%, etc. So if that is something for you to take as a consolation, you should look at office properties or commercial properties, a shop or an office. But homes, residential property, I will steer clear of it.
Now let me flip this around. For those who are still paying rent in cities like Mumbai or in NCR and are really thinking that finally this is going to be their breakthrough year, when they can actually convert their rental accommodation into a self-owned one, is 2017 going to be the year?
Not really, because your rental yields for housing is still about 2 to 2.5, not even more than 3%. If your rental yield is 2%, it doesn't make any financial sense for you to ever get into buying that apartment. Even if you're talking about income tax benefits and this and that, whatever said and done, if the rental yield is 2%, you should rather be very happy if you are living in a rented accommodation.
So you should continue paying rent.
Absolutely, absolutely. It's perhaps more of a cultural issue that most of us Indians have, that
creating
we must
an asset, a self-owned asset. Yeah.
Right, but wiser are those who are not swayed by those kind of arguments. I've seen many of my colleagues who have no burden of owning a house, and like a free bird, they can actually move any place and go up the corporate ladder. I don't have that option because I've bought a house in Bombay.
Okay, well, that's one view. Amit, I'm going to take your sense on this as well. We've discussed the investors. What about those who want to buy their own home? Is it going to be the right time? And again, if you could just break it down geographically, when would you say would be the best time if you look at the NCR market or the Mumbai market or cities like Bengaluru and Hyderabad?
See, I would say that if you have figured it out that this is the locality that you want to live in, and you are basically taking a bet for the next 8 to 10 years, then mathematically what it means is that if the price goes up by 3 times also, say in a 8 to 10 year horizon, and then the 2.5% rental yield which you are getting will become effectively 7.5%, 8% in 8 to 10 years, which means your EMI cash outflow will equal with the rent that you would be getting notionally. So that makes it cash neutral for you as a user. So if you are looking for 8 to 10 year horizon and if it's a good deal, it makes sense to buy. It doesn't make sense perhaps, especially in the NCR region, to take construction risk. So we would recommend more towards the ready to move property, and not just look at the developer properties, especially also in west as well as south. Look at the properties which are already ready to made, which can be delivered, which already someone is living in and you know about the locality, and perhaps place a bet there. That would make more sense.
Okay, all right, gentlemen. Property will always be an interesting game here in India. Thank you so much for joining in and giving us some perspective on how the market stands today. Well, that's it on this week's episode of Money, Money, Money. We'll see you again next week. Another theme, another topic, and another set of guests.